In general, it is the buyer's obligation to comply with FIRPTA payment of tax when the seller is subject to the Foreign Investment in Real Property Tax Act. This is almost always a surprise to buyers to learn that in addition to their obligations and commitments to purchase and acquire a piece of property, they now also have to make certain representations and work with the seller when the seller is a non-US taxpayer. We recommend at the time of the listing that you sit down with your seller client and inquire, are you subject to Foreign Investment in Real Property Tax Act? It continues to be a subject of fascination to many people who've never sat at a table involving a FIRPTA type transaction, that it is in fact the buyer's obligation. I'll emphasize it again. Think about the IRS when they first established this law in 1980. The seller, who's a non-US taxpayer, generally does not have a permanent place of residence and by definition in the United States. Once that property is transferred, if no one complies with the FIRPTA obligation, how does the IRS go about collecting? So the IRS, in the self-interest of making sure that tax obligations are in fact paid, has made the buyer ultimately responsible for the seller's performance and the seller's submittal of monies owed under FIRPTA. Many times buyers are overwhelmed, especially first-time home buyers, if they are told, Mr. and Mrs. Buyer, it's your obligation to collect tax from the seller and pay that to the IRS. The title company, as a ministerial service to the buyer and to facilitate the transaction, will inquire about the seller's FIRPTA status. Hopefully, the agents involved in the transaction will already be clear whether FIRPTA is involved. In many states, the listing agreement and the listing checklist that a realtor or licensee might use with their seller involves checking the box that the seller has been asked, will this transfer be subject to FIRPTA withholding? When a buyer is unaware that the seller is subject to FIRPTA withholding, the obligations and consequences can be huge. The IRS can penalize the buyer, collect the tax obligation from the buyer, and then it would be the buyer's obligation to look for the seller and try to track that money down. A non-US taxpayer who has sold property in the United States would be very difficult for the buyer to find. It is in everyone's best interest to anticipate and prepare for FIRPTA filings well in advance of closing. Throughout the process, it's important to keep your title company and Title Alliance staff informed. We can best work with you within the required processes and protocols to assure that your sellers and the buyers and you as the agents are in compliance with any federal requirements.